So with a single investment, an investor can actually get access to quite a diversified portfolio and in a very low cost way.
Well, AFIC we think is very different in the market. We're a long-term investor. We hold our stocks for very long periods of time. Therefore, we're looking for quality businesses, businesses that have long-term sustainable business models, companies that have a very good competitive advantage, companies that we can harvest the income flows. We want to see those dividends grow over time because we know it's important to our shareholders that we do grow our dividends.
The closed-end structure that a listed investment company operates, we think is good for investors. It really allows us to be patient in terms of the way we invest our capital. We're really not subject to the ebbs and flows of funds flowing in and out, which can particularly happen through short-term market movements. And really what you find with a company like AFIC, we're really much a contrarian investor, which gives us an opportunity to invest when there's volatility in the market and when there's pressure on share prices, knowing in fact there's still good quality companies that we can invest in for the long term.
AFIC shares are traded on the share market, and that share price will generally trade around what we call the NTA, which is basically the fair value. That's the value of the assets of the company divided by the number of shares. And sometimes the share price can be above that, sometimes it can be below, and that's the premium or discount. So it's just important that investors understand that if they're looking to buy or sell shares, whether they are selling them or buying them at a premium or discount to that fair value.
The factors that influence the discount or premium where the share price is trading to net asset backing are really market conditions. So when the market's running very strongly and people think they can invest themselves, sometimes we trade at a discount. On the other side of that, when there's market volatility and people are uncertain and they like the consistency of dividend that we provide, we trade at a premium. For investors, the tax treatment of LICs is relatively straightforward. We pass through the franked dividends that we receive from the companies we invest in. We also pass on some of the realised gains that we have through what they call an LIC attributable gain. Again, very simple. Unlike an unlisted trust, which has a whole range of different tax treatments that potentially could end up in the investor's hands, all our investments for shareholders are after tax and very simple in terms of doing their tax return.